Imagine this. You're ready to take your investing to the next level, aiming to build a portfolio that doesn't just grow but also pays you a steady income, enough to potentially live off through the power of ETFs. You've narrowed it down to three top contenders: VYM, SCHD, and DGRO. But here's a twist. Choosing the right one could be the key to unlocking a future where your money works for you, day in and day out. After 30 years, Harry could expect a collective monthly dividend income of approximately $4,833 from his investments in VYM, SCHD, and DGRO. In the next few minutes, I'm going to unveil the latest data from August 2024, where we'll discover which of these ETFs offer the juiciest dividend yields, which one has outpaced the annual return of up to 12.41%, and which could be your ticket to financial freedom. Imagine having a strategy so powerful that it could generate enough income to cover your expenses, potentially allowing you to live off your investments without ever needing to clip into your savings. In 30 years, in one of these, your investments would grow to approximately $3,463,000. But here's where the real suspense comes in. By the end of the video, you won't just know which ETF could help you maximize your returns, you'll also uncover which one might be the key to living the life you've always dreamt of, where your investments do the heavy lifting. So stay tuned, because the difference between these ETFs could change your financial future forever. Ready to discover which ETF could be your path to living off your investments? Let's dive in and explore the possibilities that can make your dream a reality. Vanguard High Yield Index Fund ETF, VYM. The Vanguard High Dividend Yield Index Fund ETF VYM is designed to track the performance of the FTSE High Dividend Yield Index, which includes U.S. companies with above-average dividend yields. As of August 2024, VYM's net assets are approximately $70 billion, with a market price of $123.72. The fund's expense ratio is notably low at 0.06%, making it an attractive option for cost-conscious investors. VYM's dividend yield stands at 2.87%, with an annual dividend payout of $3.56 per share. The payout ratio is 48.79%, indicating a balanced approach to dividend distribution and retention for growth. VYM's performance has been robust, with a year-to-date return of 12.94% and a one-year return of 19.53%. Over the past 3 years, the fund has achieved an annual return of 7.82%, while the 5-year and 10-year average annual returns are 10.62% and 10.7% respectively. The fund's beta over the past 5 years is 0.76, suggesting lower volatility compared to the broader market. The top 10 holdings of VYM constitute 24.26% of its total assets, with a Broadroom Inc. being the largest holding at 4.23%. Other significant holdings include JP Morgan Chase & Co. at 3.54%, Exxon Mobil Corporation at 3.9%, and Johnson & Johnson at 2.21%. The fund's collector sector allocation is diversified, with the largest sectors being financial services, consumer defense, technology, and healthcare. VYM's historical performance highlights its resilience and growth potential. The fund's 5-year compound annual growth rate is 11.19%, while the 10-year CAGR is 9.90%. This consistent performance underscores VYM's ability to deliver steady returns over the long term. The fund's quarterly dividend payments have shown a growth rate of 6.83%, reflecting its commitment to providing increasing income to investors. The investment strategy of VYM involves a passively managed full replication approach, aiming to mirror the performance of the FTSE High Dividend Yield Index by holding each stock in approximately the same proportion as its weighting in the index. The strategy ensures that the fund remains aligned with its objective, providing high dividend yields while maintaining a diversified portfolio. In summary, VYM offers a compelling investment opportunity for those seeking high dividend yields and long-term growth. Its low expense ratio, strong historical performance, and diversified holdings make it a suitable, choice for income-focused investors. The fund's ability to balance dividend payments and payouts with growth potential, as evidenced by its payout ratio and, dividend growth rate, further enhances its appeal. With a solid track record and a strategic approach to dividend investing, VYM stands out as a reliable option in the realm of high dividend yield ETFs. Schwab US Dividend ETF Equity. Schwab US Dividend Equity ETF, SCHD. The Schwab U.S. Dividend Equity ETF SCHD aims to track the performance of the Dow Jones U.S. Dividend 100 Index, which includes high dividend yielding U.S. companies with a history of consistent dividend payments. As of August 2024, SCHD's net assets are approximately $58.65 billion, with a market cap and price of $81.96. The fund's expense ratio is notably low at 0.06%, making it an attractive option for cost-conscious investors. SCHD's dividend yield stands at 3.43% with an annual dividend payout of $2.84 per share. The payout ratio is 53.81%, indicating balanced approach to dividend distribution and retention for growth. SCHD's performance has been robust, with a year-to-date return of 9.64% and a one-year return of 16.13%. Over the past 3 years, the fund has achieved an average annual return of 5.26%, while 5-year and 10-year average annual returns are 12.79% and 11.72% respectively. The fund's beta over the past 5 years is 0.77, suggesting lower volatility compared to the broader market. The top 10 holdings of SCHD constitute 40.55% of its total assets, with the Lockheed Martin Corporation being the largest holding at 4.33%. Other significant holdings include AbbVie Inc. at 4.23%, BlackRock Inc. at 4.14%, and the Home Depot Inc. at 4.12%. The fund's sector allocation is diversified, with the largest sectors being financial services, healthcare, consumer defensive, and industrials. SCHD's historical performance highlights its resilience and growth potential. The fund's 5-year compound annual growth rate is 12.70%, while the 10-year CAGR is 11.42%. This consistent performance underscores SCHD's ability to deliver steady returns over the long term. The fund's quarterly dividend payments have shown a growth rate of 8.86%, reflecting its commitment to providing increasing income to investors. The investment strategy of SCHD involves a passively managed full replication approach, aiming to mirror the performance of the Dow Jones U.S. Dividend 100 Index by holding each stock in approximately by the same proportion as its weighting in the index. This strategy ensures that the fund remains aligned with its objective of providing high dividend yields, while maintaining a diversified portfolio. In summary, SCHD offers a compelling investment opportunity for those seeking high dividend yields and long-term growth. Its low expense ratio, strong historical performance, and diversified holdings make it a suitable choice for income-focused investors. The fund's ability to balance dividend payouts with growth potential, as evidenced by its payout ratio and dividend growth rate, further enhances its appeal. With a solid track record and a strategic approach to dividend investing, SCHD stands out as a reliable option in the realm of high dividend yield ETFs. iShares Core Dividend ETF. The iShares Core Dividend Growth Rate ETF aims to track the performance of the Morningstar U.S. Dividend Growth Index, which includes U.S. companies with a consistent history of dividend growth. As of August 2024, DGRO's net assets are approximately $28.99 billion with a market price of $60.57. The fund's expense ratio is 0.08%, making it a cost-effective option for investors. DGRO's dividend yield stands at 2.26% with an annual dividend payout of $1.36. The payout ratio is 46.42%, indicating a balanced approach, to dividend distribution and retention for growth. DGRO's performance has been strong, with a year-to-date return of 13.73% and a one-year return of 20.43%. Over the past 3 years, the fund has achieved an average annual return of 6.97%, while the 5-year and 10-year average annual returns are 12.79% and 11.72% respectively. The fund's beta over the past 5 years is 0.82, suggesting lower volatility compared to the broader market. The top 10 holdings of DGRO constitute 26.69%. That is of its total assets, with JP Morgan Chase & Co. being the largest holding at 3.04%. Other significant holdings include Exxon Mobil Corporation at 2.97%, Johnson & Johnson at 2.94%, and Apple Inc. at 2.87%. The fund's sector allocation is diversified, with the largest sectors being financial services, healthcare, technology, and industrials. DGRO's historical performance highlights its resilience and growth potential. The fund's 5-year compound annual growth rate is 12.70%, while the 10-year CAGR is 11.42%. This consistent performance underscores its ability to deliver steady returns over the long term. The fund's quarterly dividend payments have shown a growth rate of 10.84%, reflecting its commitment to providing increasing income to investors. The investment strategy of DGRO involves a passively managed full replication approach, aiming to mirror the performance of the Morningstar U.S. Dividend Growth Index by holding each stock in approximately by the same proportion as its weighting in the index. The strategy ensures that the fund remains aligned with its objective of providing high dividend yields while maintaining a diversified portfolio. In summary, DGRO offers a compelling investment opportunity for those seeking high dividend yields and a long-term growth. Its low expense ratio, strong historical performance, and diversified holdings make it a suitable choice for income-focused investors. The fund's ability to balance dividend payouts with growth potential, as evidenced by its payout ratio and dividend growth rate, further enhances its appeal. With a solid track record and a strategic approach to dividend investing, DGRO stands as a reliable option in the realm of high dividend yield ETFs. Long-term growth projections, VYM. 1 year. If Harry invests $100,000 in VYM, assuming an average annual return of 10.7%, his investment will grow to approximately $110,070. The dividend yield is about 2.89%, so he will receive about $2,890 in dividends. 5 years. Over 5 years with the same average annual return, Harry's investment will grow to approximately $161,051. The dividends would also, grow, assuming a 6.83% annual growth rate. By the end of the 5 years, the annual dividend payout would be around $4,000. 10 years. In the 10 years, the investment would grow approximately $259,374. The dividends, growing at the same rate, would be around $5,500 annually by the end of the period. 20 years. After 20 years, Harry's investment would be worth approximately $672,750. The annual dividend payout ratio would be around 10,000, reflecting the power of compounding and dividend growth. 30 years. In 30 years, the investment would grow to approximately $1,745,494. The annual dividend payout would be around $18,000, showcasing significant growth in both principal and dividend income. SCHD. 1 year. With an initial investment of $100,000 and an average annual return of 12.49%, Harry's investment would grow to approximately $112,490. The dividend yield is around 3.55%, so he would receive about $3,500 in dividends. 5 years. Over 5 years, the investment will grow to approximately $180,611. The dividends, assuming an 8.86% annual growth rate, would be around $5,000 annually by the end of the period. 10 years. In 10 years, the investment would grow to approximately $326,204. The annual dividend payout would be around $8,500 by the end of the period. 20 years. After 20 years, Harry's investment would be worth approximately $1,063,000. The annual dividend payout would be around $15,000, reflecting significant growth. 30 years. In 30 years, the investment would grow to approximately $3,463,000. The annual dividend payout would be around $25,000, showcasing substantial growth in both principal and dividend income. DGRO. 1 year. If Harry invests $100,000 in DGRO, assuming an average annual return of 10.5%, his investment will grow to approximately $110,500. The dividend yield is around 2.5%, so he would receive about $2,500 in dividends. 5 years. Over 5 years, the investment would grow to approximately $162,889. The dividends, assuming a 7% annual growth rate, would be around $3,500 annually by the end of the period. 10 years. In 10 years, the investment would grow to approximately $265,330. The annual dividend payout would be around $5,000 by the end of the period. 20 years. After 20 years, Harry's investment would be worth approximately $704,000. The annual dividend payout ratio would be around $9,000, reflecting significant growth. 30 years. In 30 years, the investment would grow to approximately $1,867,000. The annual dividend payout would be around $15,000, showcasing substantial growth in both principal and dividend income. These projections illustrate the potential growth of Harry's investments in VYM, SCHD, and DGRO over different time horizons, highlighting the power of compounding and dividend growth. VYM, stability in dividends with sensitivity to economic shocks. The Vanguard High Dividend Yield ETF is widely recognized for its stability due to its focus on large-cap, high dividend-paying companies. However, the stability comes with a sensitivity to broader economic conditions, especially during downturns. VYM's heavy investment in sectors like financials, healthcare, and consumer staples has historically provided consistent returns during periods of economic expansion. For instance, from 2010 to 2019, VYM averaged an annual return of about 12%, slightly trailing the S&P 500's 13.5%. However, VYM's performance can be notably impacted by the market shocks. During the 2020 COVID-19 pandemic, VYM's value dropped by nearly 30% in March, reflecting its exposure to economic uncertainty. Similarly, in the 2008 financial crisis, VYM saw a significant downturn of over 40%, as its high dividend sectors were heavily hit. While VYM has recovered from these downturns, these incidents include the highlight of its vulnerability to economic stress, especially in sectors heavily tied to the overall economy. Despite this, VYM's high dividend yield offers a cushion during tough times, providing steady income even when the market is volatile. SCHD, quality dividend growth with resilience to market corrections. The Schwab U.S. Dividend Equity ETF has built a reputation for its focus on high-quality, financially sounding companies, which offers resilience during market corrections. SCHD's strategy of investing in companies with strong fundamentals such as high big returns on equity and low debt, it helps it weather turbulent market conditions better than many of its peers. This was evident during the 2020 COVID-19 pandemic when SCHD experienced a 27% drop from February to March but quickly recovered most of its losses by the year's end, reflecting the strength of its underlying companies. SCHD's performance is also notable during periods of market stability and growth. From 2012 to 2019, SCHD delivered an average annual return of approximately 13%, outperforming many other dividend ETFs. However, during rapid growth phases, driven by non-dividend paying or low dividend growth tech stocks, like in 2020 and 2021, SCHD's returns lagged behind more growth-oriented funds. Despite this, SCHD's focus on quality ensures it captures steady gains in most market conditions while offering protection against severe downturns. DGRO balanced growth with dividend reliability. The iShares Core Dividend Growth ETF offers a balance between growth and income, focusing on companies with a strong history of increasing their dividends. DGRO has performed well in rising markets, especially when dividend-paying growth stocks are in favor. For example, during the 2016 to 2019 bull market, DGRO achieved an annual return of around 15%, driven by its exposure to robust sectors like information, technology, and healthcare. However, DGRO is not without its challenges. In early 2022, as inflation fears and rising interest rates triggered a market sell-off, DGRO, with its significant holdings, its tech, and healthcare, saw a decline of about 10% in the first quarter. Despite this, DGRO's focus on companies with consistent dividend growth provided some resilience, as these companies were still able to increase payouts even in tough economic environments. DGRO's long-term strategy is centered on companies that can grow dividends over time, which tends to lead to capital appreciation and increasing income. However, during periods dominated by high growth, non-dividend paying stocks, DGRO might underperform compared to broader market indices. Despite these risks, DGRO's focus on dividend growth offers protection during downturns, making it a strong choice for the long-term investors who seek a balanced approach to growth and income. So what's your next move? The choice is in your hands, and it could be the decision that shapes your financial future. Will you go for the stability of VYM, the balanced growth of SCHD, or the high potential of DGRO? Whichever path you choose, remember, your investment today could be the key to, unlocking the life that you've always dreamed of. Don't wait, hit that subscribe button, give a video a thumbs up, and dive into the world of dividend investing with confidence. Your financial freedom is just one smart decision away.